Hello, this is Blago, a CEO and founder of Modeliks, a business planning and reporting solution for startups and SMEs. Today, let's talk about a performance dashboard for an agribusiness. A performance dashboard helps you get a complete view of your company's performance at a glance. It helps you make data driven decisions to keep improving and growing your agribusiness. So, in the performance dashboard, there are five things you want to look at in order to fully understand how your business is performing. Number one, your revenue performance. Are we growing our revenues as fast as we would like and we can? Number two, our profitability. We can have large revenues growing fast, but at some point of time, we have to be profitable. Number three, our cash flow. We can be profitable, but if we need to keep investing into our business in order to sustain it, if we need to keep investing into assets for our business, we might run out of cash even though we are profitable. Number four, our operating KPIs, in order to understand how is our business performing operationally, not just financially. And number five, our product category performance. Different products that we offer would have different performance. So we need to keep an eye on which products are performing better than others and keep evolving our product portfolio in order to stay relevant and profitable. So let's look at how a one-page performance dashboard looks like for an agribusiness that helps us answer all these questions in a matter of minutes. This is a one-page performance dashboard for an agribusiness. Now, what do we want to look at in this dashboard? First thing is our revenue performance. How is our revenue performing versus our plan and versus previous year? Then we want to quickly look at our expenses. Again, how are they performing against plan and previous year? Our EBITDA or our profit, our operating profit, and our cash position, just to make sure we are okay and not running off cash anytime soon. Now that we've seen these main KPIs, financial KPIs, we want to dig deeper into our profitability. Now, there are two charts we want to look at when we talk about profitability. First is the EBITDA chart. Now, the EBITDA chart tells us, or EBITDA is our operating profit. The EBITDA chart, bridge chart, tells us how much was our planned EBITDA, how much is our actual EBITDA for the period which we're reporting, and then the reasons for the difference between our plan and our actual EBITDA. And in this case here, what we can see is that we had a planned EBITDA of 146,000, but our actual EBITDA is 165,000. Great, we are 13% higher than our plan. We should be happy with that. Now, what are the reasons for our EBITDA being higher than the plan? Well, we can quickly see from an EBITDA bridge chart that the main reason is that we have generated $40,000 of revenues more than what we expected. We had 28,000 more employee costs than we expected, so we need to dig a little bit deeper into that and understand whether that is reasonable or not, or we've just spent more on employees than we should. And then we had $24,000 dollars of cost savings in our business. Great, great performance, and those are the reasons why our actual EBITDA is better than our plan. Next, we want to move into profit margins. Three most important profit margins we want to look at: our gross profit margin, our EBITDA profit margin, and our net profit margin. Actual versus the plan and versus previous year. After that, we move into operating KPIs. Operating KPIs that we want to look at in an agribusiness are: first thing, how many units have we produced of whatever we are producing, and is that better or worse than the plan and previous year? What is the average sales price that we're able to sell these units at? What is the crop yield that we're getting per acre? What is the production cost per acre? What is the percentage organic produce from our portfolio if we are producing any organic products? What is our waste percentage, pest and disease incidence percentages, and then what is our seed cost per acre, energy and water cost per acre, fertilizer cost per acre, and labor cost per acre, to understand our cost structure for our production. And finally, equipment utilization rate, to make sure we are utilizing our equipment as much as we should. With these KPIs, we get a full understanding of how are our operations of our agribusiness performing. Next, we want to move on to our product category performance. Let's say we have 5 or 6 or 7 different crops that we're producing. We want to understand for each product, for each crop, what three things. and we plot that on such a bubble chart for best display and understanding of the performance per category. On this bubble chart, for each category or for each product, we have the revenue growth on the y-axis, and we have the gross margin on the x-axis, and then the size of the bubble is the revenue that we generate from each product category. So very quickly we can see which products are performing very well. Actually, they have high margin, high growth, and high volume in terms of revenue, and which product categories are not performing so well, and maybe we want to consider changing these product categories with another product, because the land that we have for production is limited. So we always want to be growing and producing products which have a higher margin, a larger volume, and a higher potential for growth. So in this case, we see that probably product category number 5, whatever that is a low margin category, low growth, and low volume. This is probably a category perfect for discontinuing and changing it with some other product. And then after understanding product category performance and making decisions around our portfolio, the last thing we want to look at is our cash flow. Now, two charts that we want to look at. First, let's look at working capital. Working capital, there are three KPIs important. Number one, DSO, and this is days sales outstanding. This tells us how many days does it take us to collect the money from our customers from the time when we sell them the product. So it takes us 67 days from the time we sell a product to collect from the actual cash from our customers. This sounds a little bit too long. Maybe there is some room for improvement. Number two, the days payable outstanding. What this tells us is how many days does it take us to pay to our vendors for the invoices that we receive from them. It takes us 40 days. We get 40 days to pay our invoices, and in comparison to the 67 days that it takes us to collect from our customers, we see that there is probably room for improvement there. We should either reduce the number of days that it takes us to collect our cash, or increase the number of days that it takes us to pay to our vendors. And the last important KPI in working capital is the days inventory outstanding. What this tells us is how many days does it take us to sell our product from the time it becomes available for sale in our inventory. Well, it takes us 57 days. Probably there's room for improvement there. The lower the days inventory outstanding number is, the faster that we're able to sell our products, and the better cash management we are able to have for our business. So those are the three most important KPIs when it comes to working capital. And the last chart we want to look at is our cash flow. Our cash flow there are three components: our operating cash flow, or the cash that we're able to generate from our operations, meaning the revenues or the sales that we generate minus all our costs. The investing cash flow, this is the amount of money that we either invest into our business assets, or in this case, because it's positive, the money that we get from selling assets. And then financing cash flow. This would be repayment of loans, payment of dividends, or if it's a cash inflow, then it would be investments that we get into our business. So when we add up these three types of cash flows, operating cash flow, investing cash flow, and a financing cash flow, we get to our net cash flow for the period. We want to make sure that our business is able to generate positive cash on a regular basis. So in this case, we're able to generate positive cash flow for our business. Our cash situation is 429,000. It's a good amount of money that we have, so we are safe from a cash flow perspective. That's it. That's a one-page agribusiness dashboard that helps us understand within a minute how well is our business performing, and where are the areas that require more focus, that we need to dig deeper to understand how we can improve the performance of those specific areas. If you're not tracking these KPIs for your agribusiness today, well, start right now. It will help you tremendously manage and grow your agribusiness in the future. And if you need help with planning or reporting about your business, do visit us at modeliks.com or contact us at contact@modeliks.com. I hope this session was helpful, and have a great day.